To another video from your boy Dudley, Do Right Ellis Dudley. Welcome to Building for Generations, our YouTube channel here. We are also on our Instagram, _tax pros. So our Instagram has the live going right now. I was going through and I was like, let me get on live and share with my people here what's going on and what I'm doing for the year end, right? So year end tax planning, a lot of business people are tax planning, and a lot of just families are tax planning and putting money aside and being smart with their money. So I want to share with you in this video today some amazing tax tips to build your wealth with yourself and in your family. So today I was on one of my brokerages is Charles Schwab. I use Charles Schwab to do a lot of a couple things, move money around, and I was moving money around. And I wanted to make my $6,000 contributions because every year you get $6,000 that you get to contribute to your IRA or retirement account. I have a Roth IRA that I put the $6,000 in, and I don't get necessarily a deduction for that. So I guess I'm gonna let that play through. We'll see. I'll edit it out, because my network got dropped for a minute on my home laptop here. So we're gonna continue, or should I start over? I'm gonna just go ahead and start over. So welcome back to Building for Generations. You're talking to your boy Dudley Do Right here. We are talking about amazing tax tips to build your wealth, and your family's wealth. Um, and I was going through just Charles Schwab today, and that's one of the brokerages I use to manage my money. And I wanted to put some money aside for the year end, right? So each person, each American citizen, we get $6,000 that we get to put towards a retirement account. And I wanted to put my $6,000 towards my IRA, which is a Roth IRA, right? So you get to put $6,000 to, which in my case is a Roth IRA, and that money I can invest in the stock market, invest in real estate, and that money grows tax free until I'm 59 and a half, and I get to take that money out tax free. I don't get a deduction now for the 6,000 that I put in my Roth IRA, but I get to grow that money tax free. So today I was going through and making my contribution of the $6,000 to my Roth IRA, and I came across something that I was like, man, this would be some good information for my family to definitely absorb and then use in their family so they can build wealth and put away money and do the right thing with money. And that is the custodial account, because I have kids, right? And I'm planning for my future and I'm building for generations, hence the channel, right? So I'm building my family up, and I want you guys to build your family up and build wealth, right? So that's the aim here, is to definitely start your business, buy real estate, and hire your kids. We always say that here on Building for Generations, and at DAS _tax pros on our Instagram. So we're always looking for different ways that we can teach each other how to build for our family. And while I was doing this, people on Instagram, you won't see this, so sorry about that. Go ahead and get on my YouTube channel, Building for Generations, to see this. But I'm going to go ahead and share my screen with you guys, for you guys who are fortunate enough to be here with me live. So as I was going through Charles Schwab, one of the things that popped out to me was the ease of the account. Like, I love using Charles Schwab to either invest my money, or if I have some, I used to use it when I traveled the world and went to different countries, and I didn't want to pay those transfer fees and currency fees and stuff like that were crazy. Charles Schwab would reimburse me those fees. So that's how I started really using Charles Schwab. In my retirement account was with Charles Schwab when I worked, at Grant Thornton in public accounting. So my relationship with Charles Schwab has been good. I have signed up and told multiple clients of mine at Dudley Accounting Services about this custodial account, and it's a part of our tax plan. It's nothing, to hide from you guys. It's a part of our tax plan and something that we do for you and your family to save money. So you get to make yourself as an individual. You get to make $6,000. Contribution to your Roth IRA. In my situation, if you got a different retirement account, there are different limits of contributions that you can make. But I'm focusing on the Roth IRA because that's most beneficial to me and my family and what I'm doing, right? So the Roth IRA allows you to contribute $6,000, and that money grows tax free. When you invest it in the stock market and you make gains, that money is not taxable, and you get to take it out when 59 and a half. And you get to take it out early with different circumstances, but we're not going to get into that in this video. But today I did that, and then I ran across this custodial account that I remember setting up for one of our clients. Was a mother and had a kid that worked in her business for her, and I taught her, and we went through how to pay her kid that was working in her business, and take the kid's earned income, take that earned income that she paid her kid through her business, and turn it back around and put that earned income that the kid has into a custodial account and invest it, right? That's another major tool that we are doing, is taking our money that we invest and taking our money that we make from our businesses, right? So Dudley Accounting Services, tax accounting firm, we make money, right? I take the money that I make from my business or my rental property, right? I take the money that I make from my rental property, and I pay my kid to clean up, right? Clean up sticks, clean up leaves and stuff like that around the house. He takes that earned income that he makes from my business, my rental property. He puts that in his own custodial account, which he can put that on the market and invest that money, and he can grow that money basically tax free up to $220, right? So it's a thing where you can take that you can take the income. It can be unearned income, right? So this unearned income that you put in a custodial account will grow as unearned income. And that kid who had that earned income that he put into the custodial account to make unearned income, now you don't pay any, as a parent, you don't pay any taxes on $2,200. That's your giveaway for that child. $2,200 per child is your giveaway for that unearned credit. The rest of the income, unearned income above that, is going to be taxable at the parent's tax rate, which is the kiddie tax. So I hope I didn't get too confusing. I try not to go really in depth with the accounting minutia. I try to really paint the picture for you guys, but that's what happens. Basically, I pay my kid out of my rental property, right? My business, pay my kid. He does stuff for me, and I pay him, a rate, right? He takes that earned income and he puts it in a custodial account. You guys can sign up right here on Charles Schwab, right? You guys can do it. I'm gonna walk you through here in a bit. You take that earned income that you give your kid, and you put that in a custodial account, and you make unearned income. And that unearned income, you get tax benefits on that unearned income as well, up to $2,200 per kid that you get tax free of that unearned income. The rest of the money, unearned income above, right, above the 2,200 is going to be at your tax rate, the parent's tax rate, the kiddie tax, right? So really quickly, so I don't keep you guys long, I'm going to go through what it looks like to set up a custodial account on Charles Schwab. So it's called Schwab One, and you'll set it up and there's no contribution limits for the kid. So he can contribute as much as you want. And one thing you guys want to be aware of is the gift tag. Anything that you give somebody with a value of $15,000 or less, like you don't have to pay a gift tax on, right? So this is a good, way to put money away. This is a $2,200 that I was talking about the unearned income tax free benefit that you guys can get. But definitely look into setting up the Schwab One account for your kid. Like, this is like amazing. Like, to live in America and to have these benefits, I'm really just making it known and spreading the love, because knowledge, I know a lot, but I really want to spread a lot. That's more important to me. All assets are held in the child's name, so all the assets in the custodial account will be held in the child's name. 80% of the assets will be considered when applying for financial aid, right? So this is a custodial irrevocable gift and must be turned over to the child when he or she reaches the age of maturity. So his age of maturity is 18 or 21, depending on if they're going to college or their school, depending on your state statute that you guys have in your states. Any funds used prior to the age of maturity must be to the sole benefit of the minor. So again, you can take these funds out and use them for the kid. And this is what I recommend all parents who have small businesses or big businesses to hire your kids. Take that money that you pay your kids with, invest that money, and spend that money on their clothes, their daycare, and all that stuff. Let's get smart about money. Let's get smart about what we do. I'm all about giving you guys value, so definitely take it and act on it, right? Take it and act on it. Definitely like this video. Go and like all of my videos. Hit that subscribe button right now. If you guys are on my Instagram, go to my YouTube channel, Building for Generations. We are Dudley Accounting Services, a tax accounting firm, and we are here to get you to where you are going. Definitely stay blessed, family. And if you guys any questions or anything like that, reach out to us at DudleyAccountingServices.com. So that's DudleyAccountingServices.com, and we will be glad to help you guys get to where you are going. Peace.